What if I told you that a conflict happening thousands of miles away could quietly drain your wallet, raise your daily expenses, and even put your job at risk, without you ever realizing how it all started? Right now, tensions in the Middle East are not just another headline you scroll past, they are a potential trigger for a chain reaction that can shake the entire global economy. The truth is, every time a missile is fired or tensions escalate in this region, global markets don't just watch, they react. Oil prices begin to move, investors start to panic, and governments prepare for uncertainty. And here's the part most people don't understand. The global economy today is so deeply connected that a disruption in one region can ripple across continents within days. This means the price you pay for fuel, food, electricity, and even basic necessities is directly linked to what's happening in these conflict zones. While it may seem distant, the impact is very real and very personal. In this video, we're going to break down exactly how a Middle East conflict could potentially crash the global economy, step by step, in a way that's simple and clear. No complicated economics, no political bias, just the real mechanisms that connect war to your everyday life. You'll understand why this region holds so much power over global stability, how something like oil supply disruptions can send shockwaves through entire industries, and why financial markets react so aggressively to uncertainty. We'll also look at how past conflicts have triggered economic downturns and why the current situation could be even more dangerous in today's fragile global system. By the end, you won't just see this as another news story, you'll see it as a warning signal. Because the biggest advantage in uncertain times isn't luck, it's awareness. The Middle East sits at the heart of the world's oil supply, producing a massive share of the energy that powers industries, transport, and daily life. When conflict rises in this region, oil production and supply chains face immediate risk. Even the fear of disruption is enough to send oil prices sharply higher. And when oil prices rise, it doesn't just affect fuel, it impacts everything. From shipping goods to running factories, costs increase across the board. This is where the chain reaction begins because oil is not just a commodity, it is the backbone of the global economy, and any shock here spreads everywhere. As oil prices surge, the next wave hits consumers directly through inflation. Businesses facing higher fuel and production costs pass those expenses on to customers. Food becomes more expensive, transportation costs rise, and everyday living gets harder. At the same time, central banks step in to control inflation by increasing interest rates. This makes borrowing more expensive, slowing down spending and investment. The result is a squeeze on both businesses and households. People feel stuck, earning the same but paying more, while economies begin to slow. Under the pressure of rising costs and tightening financial conditions, financial markets react quickly to uncertainty, and conflict creates exactly that. Investors don't like unpredictability, so they begin pulling money out of stocks and risky assets. This leads to sharp declines in stock markets and increased volatility across global financial systems. Companies lose value, retirement funds shrink, and confidence drops. At the same time, investors often move their money into safer assets, signaling fear in the market. This shift can accelerate downturns as falling markets affect business confidence and consumer behavior, creating a negative cycle where fear itself becomes a driving force behind economic instability. Another major impact comes through a global trade disruption. The Middle East controls critical shipping routes like the Strait of Hormuz, where a significant portion of the world's oil and goods pass through. If conflict threatens these routes, shipping becomes slower, riskier, and more expensive. Delays start to build, supply chains break down, and shortages appear in different parts of the world. Businesses struggle to get the materials they need, and consumers face limited availability of products. In a globalized economy, where timing and efficiency are everything, even small disruptions can create massive economic consequences. When all these factors combine, rising oil prices, high inflation, falling markets, and disrupted trade, the result is a powerful domino effect. Economies begin to contract, businesses cut costs, and unemployment starts to rise. Consumer spending slows down, which further weakens economic growth. What started as a regional conflict can evolve into a global recession affecting millions of people. This is how interconnected the modern world has become. It's not just about politics or geography anymore. It's about a system where one shock can ripple across the entire planet, turning uncertainty into a full scale economic crisis. At the end of the day, what we're really looking at isn't just a regional conflict, it's a potential global turning point. Because in today's interconnected world, no major disruption stays isolated for long. What starts with rising tensions can quickly evolve into higher oil prices, growing inflation, unstable markets, and slowing economies across the globe. And while no one can predict exactly how events will unfold, history has shown us one clear pattern. Uncertainty creates risk, and those who ignore it are often the ones hit the hardest. But here's the important part. This isn't about fear, it's about awareness. The people who stay ahead during uncertain times are not the ones who panic, but the ones who understand what's happening and prepare accordingly. Because when the system gets unstable, opportunities and risks both increase. So instead of looking at this as just another news story, start seeing it as a signal, a sign that the world is shifting. And in times like these, the biggest advantage you can have is thinking ahead, staying informed, and making smarter decisions while everyone else is reacting.